everybody. This is Charles Dobbins with another rendition of the Multifamily Investing Academy podcast, and I am here with Richard Canfield. I'm going to find out if he's related to the famous Canfield. And the name of his podcast is Wealth Without Bay Street. Okay, all right. I'm an Americanos. Okay, so I think I figured it out, but I want to get into it with you. So. Once again, he's going to talk to us about beating the market, becoming your own banker, talking about wealth. But we got a lot of stuff I got to talk with this guy about. First off, okay, so he runs this one of the top podcasts in Canada. Listen, there are only 4 things that Canada is good for: cold weather, comedians, podcasts, and I can never remember the 4th thing. So you can kind of insert the 4th one there.
Well, I have a bias on that, Charles. It's definitely the music. I mean, we Canada's known. We got some pretty good rock and roll, and we got a lot of the good stuff coming out of Canada.
Well, that started recently. Okay, what, Bryan Adams? Because I'm going to date myself. Brian,
you got to go back further than that. You're talking about April Wine. You're talking about Trooper. Talking about Guess Who.
Oh, okay, wow. Okay, well, all right, yeah, you really
Tragically Hip, which never made it big in the U.S., but they're basically national heroes in Canada. So.
Oh, I know. How about is Bare Naked Ladies?
Yeah, those guys too. That's right.
Yeah, all right. Yeah, but then guess who I went to see the other day in concert? One of your comedians, Martin Short.
Oh yeah. Oh man, yeah. That guy's a legend.
With Steve Martin, and he's 73 years old. Steve Martin's 77, and Martin Short's got the best head of hair for any 25-year-old man. He's got great hair. Amazing.
Yeah, the two of those guys together, that's got to be something. I bet you that was an absolute blast. Did you go with your wife?
Yeah, I went down there. It was 3rd row seats. I spent the big money because I wanted to. I mean, when Steve Martin walked out on stage, it was just like you were in the presence of greatness. And the two of them together, I guess they've been doing this since 2015. So this 2-man show, this is not a new thing for them, but it was great. It was really, I mean, of course, they did the legendary skit where they read each other's obituary.
Well, they are 2 of the 3 amigos, so
exactly.
they've done a lot together. Those guys for sure.
And boy, that 3rd amigo got a gift with that job, and obviously never lived up to the lore. So, but all right. So, Wealth Without Bay Street. Obviously, guys, my guess here, because I'm a pretty smart guy and I know how to deduce, is that Bay Street is Canada's Wall Street. Is that right? Okay.
Yeah, you got it. The Toronto Stock Exchange is located on Bay Street. So
okay, all right, cool. All right, and the other thing is, folks, when Richard came on, I looked at his sign-on name, and it's followed by 4 digits, and that's code. Those of us in the know the code, and that means that he is most likely a Dan Sullivan protege of Strategic Coach, of which I am also the thing. Yeah. So I'll tell you, I go, you must go to the one in Toronto, right?
I'm usually scheduled for a Toronto group, but I actually recently kind of slid into a Vancouver group. They don't do it in Vancouver anymore, but there's a couple of groups that were already up and running on the West Coast. And so I'm about an hour away from Vancouver. And so just from a convenience factor, the last, 3 or 4 sessions, I just haven't been able to make it to Toronto just because of other travel arrangements. So I've been hitching my wagon to a more local group, but I have an amazing group of people still back in Toronto that I look forward to going and seeing. My next coach session coming up in August will be in Vancouver because it happens to be on my birthday. So I won't be leaving the family and going to Toronto for that, but I will definitely be going back to the Toronto session. Yeah.
I missed my original cohort twice, and I realized how I miss those guys. You just get to know them.
You build amazing relationships, totally amazing relationships. Yeah. It's amazing how you could be in totally fundamentally different businesses. People that are in supply chain, there's certainly a lot of real estate, but people doing real estate in many different categories. Right. Yep. And, there's certainly real estate professionals, like realtors, that sort of thing. Certainly a lot of insurance related professionals or financial professionals, but there's people just with every other kind of business, concrete business, construction businesses, and the type of communication that you can have with them at a different level. You're just leveling up one phase at a time. Every time you go to a coach session, and you never know what you're going to get or take away from a conversation at one of those groups that could revolutionize your thinking around how you're going to move forward in your business.
That's exactly it. One guy was saying that most people within the last hour of every day that they come here, that's when they figure out what's going to help. I said, oh, that's wrong for me. Within the first hour, I can leave, and I got what I needed out of that first hour. I remember telling our cohort would have dinner the night before, and we went around the room, and like, what do you get out of a strategic coach? And I said, I think Dan Sullivan is like the Russian hypnotist. And everybody's like, what are you talking about? I said, when my father was a young man, he used to chew his nails. And people said, the guy, you have to go down and see this Russian hypnotist in Boston, and he's going to cure you. So my dad got in his car, booked an appointment, drove all the way down to Boston, sat in this waiting room with a bunch of other people, finally gets called in. He goes and sits down with this guy for about 10 minutes. And the guy, they just talk 10 minutes. He gets up, he walks out the door wondering what just happened. And he never once chewed his nails again.
There you go.
And that's Dan Sullivan for me. I go down there, I spend the whole day, and I'm like, okay, what the hell just happened? But I go home and my business just continues to grow. I mean, when I started with him, I had 1 employee. Now I've got 10 employees. And it's every time I go there, I see my business differently. And as a matter of fact, Rich, I know this is your time, but I'm just going to say this. My new program is Multifamily OS, where I teach people how to build
the operating system.
Exactly, to build the business of multifamily. And of course, we all know where that came from. Gino Wickman, EOS, and he is a Dan Sullivan student.
Yeah, the overlap and interchange, how many people Dan Sullivan has impacted. He's been a tremendous mentor for me, and my partner Jason, and the co-host of our podcast, he just moved into the Free Zone program with Dan Sullivan, and he's graduated from 10X. And, we just recently signed an awesome publishing deal with Carrie Oberrunner, who is a publisher, does a lot of amazing things. And so we're excited about that with our book series. And so we're just mirroring and modeling a lot of the things like, look, if it's not broken, don't fix it. And clearly here's what Strategic Coach is doing and what's working. So we're just implementing a lot of those things and transitioning them into our business endeavor. So we launched a quarterly book series. We're about 3 quarters behind, but we're still, we're slow, but we're worth waiting for, Charles. And so we just launched book 3 here earlier this month. Of course, it reached #1 on Amazon, which is great. So we've had 3 Amazon bestsellers, which has been fantastic. And now that we're going to be working with Carrie Oberrunner and his team, we're really excited about what the future looks like there. So just all these collaborative opportunities that show up. And when you begin to looking at things collaboratively versus competitively, it opens up a lot of doors, and it just really is amazing. In fact, I just got back from Denver yesterday. I was at a conference of financial professionals, primarily folks that do, in essence, or some, close variation to what it is that I do. Roughly 150 of the top financial professionals in North America in that room. And we all were talking about a shared vision on how we can impact over the next 5 years, 1 million people to implement the type of strategies that we teach so they can achieve a level of financial peace of mind, success, and independence. And when I say independence, I mean independence. I don't mean, what I mean is everyone in the financial world that we live in has been trained for the last 50 plus years to be dependent on someone else, a financial advisor, the bank, their local bank, their, the stock market, the investment banks, the Goldmans, and everyone else. We've built it in a world of marketing that's bombarded so much that we get beat up around it. And all we can think is that's all that's there to help us. And so we're always working on these dependent relationships when it comes to our financial life. People in the real estate game, especially the multifamily game, they've leveled up to a point where they realize they need to take control of their life back. And they're going and proactively, with ambition, reshaping the game around independence. So they are no longer beholden or dependent to someone else's set of rules. And I like working with people just like that.
Yeah. Okay. So much of what you said is so true. I mean, that's what our goal is. My partner in our new endeavor is our job is to create 100,000 new units, multifamily units in the next 5 years. And it's all in a particular class. And it's a class that's underserved. And that's converting hotels to apartments.
Mm-hmm.
And the reason why that's underserved is because you hear that there are 1 million new apartments going online in the next year. Do you know how many of them are studios? But the demand for studios, because of the changes in the baby boomers and the Gen Ys, they need places to live, and they're not being satisfied. Their demands are not being satisfied. So it's causing a huge problem in this country.
I think it's really interesting that you've gone that route, because my observation of that is the bloodbath of the hotel industry in a post-COVID world.
Exactly.
And so the property opportunities that you and your business partner face,
oh my gosh,
you're going to be like cherry picking, basically. Yep. I mean, it's almost not even going to be fair for you to find quality properties to create that environment.
It's crazy. It's every single day, 10 new opportunities come across our desk. 10, no doubt, easily 10. And then you don't even have to look anymore. We're doing a 3-day seminar, and we just carved down the section on how to find the deals, because you don't have to go looking for them. They'll find you.
Yeah.
You just have to know how to whittle them down.
There's so much synergy in what you just said there. And one thing that pops into my brain is, like, I have a 5 and a 7-year-old. And so I'm trying to teach my kids how to see and recognize opportunity. And so one of the ways that I've done it, and my wife kind of hates this, but it started earlier on in our dating relationship over, 11, 12 years ago, is we would be driving around in the car. And of course, there's a construction fence that goes up. And I just pointed and said, you know what that is, don't you? What is it? That's opportunity.
Yeah, exactly.
Somebody's making something real happen there. They're creating value right there.
Okay.
It's happening right now.
Okay. So you use the word opportunity. I use a different word, and my word is create. And which it's, talk about the synergies. It's successful people are people that created something that didn't exist until they came along. And, you talk about, and this is one avenue that I'm behind. I'm a follower. The real creators are out there. Is when you see some new building being developed, new building being built, somebody saw that raw land or that dilapidated building and said, hey, you know what we should put there? And they were right. How do these guys do it? That's the thing that always throws me for a loop. Oh man, how'd that guy go in there and build those apartments? I didn't even know that the land existed. How did they create that opportunity?
And so there's a vision that's there, and there's also, but you can have the vision. A lot of people have vision, they have daydreams, and it's okay to daydream. There's nothing wrong with that. But if you can't also match that with some ambition and a little bit of fire under your belly so you can get things done. And a lot of that, even if you're not the person to do that, but you understand Dan Sullivan's methodology and teaching about who, not how, you can be any one of those individuals, and you can find the right who to fill the gap for you. So that project like that can be created into existence. It's literally born into existence because the thought happened first. Without that right thinking, nothing's going to take place.
Yeah. All right. So tell me about, if I'm sitting here, we just came up with this goal, we're going to do 100,000 units. You came up with 1 million people. What was your
in the next 5 years?
The next 5 years, 1 million people that you want to do what exactly with?
We want to help them embrace and implement the infinite banking concept in their life, so they can become their own banker, and they can take control one step at a time. Nothing happens overnight, of the banking function as it relates to their life's needs for the rest of time, for themselves. And then the cascade effect of that is the generational impact on their children and their grandchildren.
Yeah.
Because if they follow the things that we teach them about family banking and keeping the money in an aquarium, the money never leaves the family, then you're creating a cascade effect. And the effect is not based on money. It's based on thinking. And if we have the right thinking, we create the right result. If we have stinking thinking, then that's the result that we're going to create.
I love that, because that's exactly what I teach. My whole thing is I'm teaching you how to build a business that creates the legacy. Owning the property doesn't create the legacy. All these people who are out there thinking that passive income, I'm going to make millions in multifamily through passive income. It doesn't work that way. you don't control it. Somebody else is going to sell that asset and give you your distribution back, and then you have nothing to leave your family but cash, and you're back doing it again. And so it's all about leaving that legacy, creating that vehicle that's going to leave the legacy, and that's exactly what I teach, and that's exactly, it sounds like what you teach as well.
Yeah, it's all synergistic, and that's one of the reasons why we love and work so well with the real estate investor community, because there's certain. When someone broaches in and there's a natural attraction, because real estate has always been known as a holding facility for wealth for forever, essentially. And so people are aware of that, and their awareness brings them closer to it. They get educated, start listening to great podcasts like yours, and then they eventually start taking some action, or maybe they take the action first, they make a bunch of mistakes, and then they listen to the podcast to figure out what they did wrong. One of those two directions. And as they're down that path, there's always something that's pulling them there. It's not the real estate itself. They don't want the real estate. They want the thing on the other end of what the real estate provides. It's the income generation. It's the equity appreciation. It's the control. It's the possibility and the potential of legacy. But our mindset in the marketing of the world makes legacy think about a dollar value that's going to show up when I kick the bucket. That's how most people associate legacy. That's not how we look at it. Legacy, another coach member, his name escapes me right now, but he wrote a book, Lee Brower. It's called The Brower Quadrant. Have you read that book?
No. What's it called?
It's called the Brower Quadrant. Okay, so amazing book, and he talks about a different way of looking at legacy, and he helps people think about legacy planning from that vantage point. And it's like, look, if you could leave people all of your money, or all of your experiences, or all of your knowledge, and you can only pick one, what are you going to do?
Ooh. I guess I'd have to go with knowledge.
Perfect.
Okay.
And for me, I would say experiences.
You see?
Because if they have all the experiences, they can create all the knowledge, and all that knowledge and all the experiences will show them where not to waste time losing money, and what they can do to make the money.
Yeah. That's like, there was an old TV movie. I was a little kid, but I remember it to this day because it had a massive impact. The guy who was the actor, I think his last name was Hayes. He was a guy on an airplane who was the pilot who kept having a drinking problem. He kept putting it that way, but he had this role, and his great uncle died, multi-millionaire, and all Hayes got was a watch. And that's all his uncle left him, was a watch. And he's like, I can't believe he just gave me this watch. But then the watch had a magical ability to stop time or reverse time just by, clicking the button. And that's when he realized that his uncle gave him more than anything else. He could give him the power of time. And, and so much for the money, it's the time, which is the knowledge and, experience that he ended up making all the money too. So, that's very interesting. I listen to the knowledge and the experience. I was, tossing the two back and forth, and I thought, well, the experience comes out as a result of the knowledge. Now that I have the knowledge, I know what to go and experience, what not to experience. Mm-hmm. So Rich, I think my answer is the correct one. I'm going to stick with my answer.
And I won't begrudge it to you, because I think whatever answer anyone comes up with is the correct one for them.
Except for money, yeah.
But it opens such a good discussion.
Yeah.
And that's the key, because now we get a chance to get into our thinking. And as Dan Sullivan teaches us, it's all about how we think, and he's not the only one that did that. So right up here, you can see the book, Becoming Your Own Banker, which has completely changed my life, just like Dan Sullivan was. And the guy who wrote that book, Nelson Nash, he was my friend and my mentor. He changed not a single aspect of my life that has been positively impacted by knowing that man. And he said, it's all about how in fact, he would start a seminar, and he would begin every seminar. He would say, it's all about how you think. You see, it's all about how you think. You see, it's all about how you think. Same word, same phrase, 3 times, different emphasis to elevate the meaning. And he would begin and set the day around that. And that's the way that we help our clients understand that what they do and what they are going to do and what they want to do will either be impacted directly or indirectly by how they think.
Very cool. Very cool. So tell me about your book series. What's this all about? And I don't want you to feel badly about the fact that you're 3/4 of the time behind. I started out having a book of the month club with all my students. I think they're calling it the annual book club right now. So
Nice.
yeah.
I get it. I like that.
Yeah, don't like it. It's not good.
Well, when you get your strategic coach package every quarter and it's got a little mini book from Dan?
Like this one here, with like cartoons in the front and stuff like that. Yeah, I know exactly what you're talking about.
Nailed it. So all we're doing, if it works for Dan Sullivan, I mean, there's probably pretty good chance it can work for us. So we're just going to do our best to channel our inner Sullivan, and we're going to go and try to duplicate that and just put our spin on it for our industry. So we started off with Canadian.
Now, when you say the industry, do you mean the infinite bankers, the people that are doing the same thing you are, or the people that are your customers?
Yeah, I mean in the financial category primarily, and yeah. So really, these books are meant. Not one of these books is meant to be. We're not seeking bestseller status. That's not the purpose. The purpose is to add value primarily to our existing clients, and then those who would choose or want to become our clients, if that is the case. And ultimately, we're just trying to channel. I like to refer to as I channel my inner Nelson. Okay, so Nelson Nash wrote "Becoming Your Own Banker." All I do is what he did, just my version of it that I think he would be okay with to the best of my ability. That's basically my everyday scenario. And so we started with a Canadian's Guide to Wealth Building Without Risk. All right, and we did put some images in there. I'll see if I can I'll pick one here and let you see. So we have, not a lot of like examples, but I even have opportunity. Here's an example of opportunity magnets. And there's an image right there.
Okay, perfect.
So similar kind of a Sullivan model. And the whole concept right there is, look, when you have readily available access to capital, opportunities will hunt you down. That's something I learned from Nelson Nash. And in fact, the more access to capital you have, the higher the caliber the opportunities become. And it's not just because they weren't there before. It's because your brain can recognize them for what they are. You can start to see, and you build your filter around what the opportunity is in your world, and your filter refines and elevates so that the cream of the crop rises to the top. And that's what happens in the multifamily space for people who get their first building and then their second building, and they go through some hard knocks. They have some coaches, they learn what they did wrong, their filter tightens up, and then they're ready to attack the next deal, because when they see the deal, they know exactly which ones they're kicking off their desk, and they know which ones are going to rise off their desk that they're actually going to dig into. That's just a natural tendency of our experience learning taking hold. And if we recognize that that's what's happening, and we recognize that the only way those deals get funded is with capital, it's either our capital or someone else's capital. So the more capitalized you are in your ability to access capital on a liquid basis, the more your opportunity deal flow begins to elevate, and your decision-making matrix starts to elevate with it. Does that make sense?
Yeah.
And in our second book, Cash Follows the Leader, is all about uninterrupted daily growth with high cash value insurance. And so we teach people the fundamentals of how, using Nelson's concept of becoming your own banker, the way that we implement that, how the actual contract with the insurance that we use, the dividend paying participating whole life insurance, as a cash flow mechanism to control and elevate cash flow efficiency in your life. That's all it is. The insurance is just included. Hey, I want an efficient place to warehouse my cash flow so that I can optimize it for all the things I'm doing in my life anyway. And by the way, I get a big fat tax-free death benefit thrown in on the side. Perfect. See, Nelson Nash said that life insurance, high quality whole life insurance, was poorly misclassified. It never should have been called that. It should have been called a personal monetary system with a death benefit thrown on the side for good measure. But we'd need some kind of a convoluted, acronym to really explain that. But when you classify things properly, then they make a lot more sense. Like, as an example, people don't realize that if you take an apple and you cut it at the equator, so not from the top to the bottom, but right across the middle, and then you open it up, what you'll see is a 5-pointed star. Okay. That is a representation of the rose family in the plant realm, the entire rose family. So everything that's in that genus of family all has that same core element to it. Does that make sense?
Yeah.
So people don't realize that an apple is actually a member of the rose family. because of how we classify things. So if you classify them correctly, everything else just makes sense.
Okay. You used a term just a moment ago that I need you to explain, and that is high quality. I own whole life. I've owned whole life. I sold whole life back in my day. My father was 57 years sold whole life.
Yeah, I think you used to be a termite at one point, weren't you?
Oh, no, I own term. No, and that was a big thing, is that I had term and I had whole life throughout different stages of my life as my needs changed.
As most people still do today, by the way.
Yeah, absolutely. But you use this term high quality whole life, like you're making a unique distinction between the whole life, my father's whole life, and what you use. So am I right? Did I pick up on something?
Yeah, no, you nailed it. And what I mean by high quality is a combination of factors. So one of those factors is with which insurance carrier is it with? And what are the fundamental components of that company? And so we work primarily with mutual whole life insurance companies. All that means is that they're not publicly traded on the Toronto or the Dow or any stock exchange. Okay. They only are responsive to one individual, and that's the policy owner. So if you have whole life, that's the way that you are become an owner. There's no other way to have an ownership stake in the insurance company. Okay. So you have to be working with the right type of company. And then you have to have someone who understands the mechanics of how these contracts can be put together so that we can maximize flexibility and control of the policy owner. And so we have an example, there's a different makeup of premium. We have what's called a base premium, which is the minimum required amount to keep the policy in force. And then there's a flexible premium. It goes by different names with different companies. Nelson Nash would call it the paid up additions premium. And that's flexible. It's optional, which means it's in your control. Does that make sense? Yeah. And so as I inject capital by the way of premium into a contract, I amplify what the contract will do for me instantaneously. And I put the insurance company on a contractual obligation to grow my cash value, which is a form of capital. It's not money, it's capital. My cash value is like equity in a house or a multifamily building. Every time that cash value rises, I have the ability to access that as a collateral loan, policy loan from the insurance company with no questions asked. So here's a way I would describe this. I'm gonna give you an example. Let's assume you have two multifamily buildings. All right, one's 17 units and one's 28 units. You with me so far? Mm-hmm. Okay. You've got these buildings and they're completely and totally paid for. Okay. There's no debt on them. They produce a regular cash flow, everything that we want the real estate to do. And the equity of the building, the property value is rising every single year on autopilot, regardless of what's going on in the marketplace, regardless of the next election, who's in charge, the inflation rates, or the Fed printing and manipulating the money supply. So regardless of any of that stuff, the property value is increasing every single time. Now, you kick the bucket. You're no longer with us. You've graduated. Okay. The first building was 17 units. It sells automatically without having to go on the open market, without having to pay any real estate commissions, without having any fees and bypassing probate. And the entire value goes tax-free to the people you love and care about, like that. Does this sound good so far? Okay. Now, the other building's got 28 units, and it's still in place. It automatically transfers without any capital gain directly to your family members. And it's still producing a cash flow, and it's still going up in value. Oh, and by the way, if you need access to some money, you can access 90% of the total equity of that building with no questions asked. The money will be in your bank account typically within about less than 10 days. So you can go and buy another building. How many multifamily buildings like that do you think people would want, Charles?
Yeah. All right, wait a minute. I think I'm missing the distinction between the 17 unit and the 28 unit.
I'm going to clarify that for you.
Okay, go ahead.
These are all actually life insurance policies. And the reason I use 17 and 28 is here. Nelson Nash, who was my friend and my mentor, he's the creator of this concept called infinite banking. All love and everything goes to Nelson. He was an enigma of a human being.
Let me guess. He was Canadian.
No, he's actually.
Oh my gosh.
He's actually. I think he was born in Georgia, but he was home based out of Birmingham, Alabama. I go down to Birmingham every year, and in fact, we go and we visit Nelson's gravesite, his memorial site, every year.
Oh wow.
And so when Nelson passed away 4 years ago, he was 88 revolutions around the sun, he would say. So he just passed his 88th birthday. He was phoning people from his deathbed, man. He was going into a surgery. He didn't think he was coming out, and he was checking in with saying, he said, would say, Richard, remember, this is about the message, not about the man. Those are the kind of things that he would share with you before he left. Well, when Nelson passed away, 17 whole life insurance contracts paid a tax-free death benefit because there were 17 contracts on Nelson's life. He was the life insured. He was the body. Does that make sense?
Yeah.
But he had 28 other contracts in force. They're all property, not property in the physical sense that you and I understand, but as a lawyer, contractually, it's a form contract, of property. Yeah. It's property by contract.
It's an asset. A contract is an asset.
28 property contract assets in place on other bodies. His kids, his wife, Mary, his grandchildren, and his great-grandchildren. About 2 months or 3 months before Nelson passed away, he got another policy because a great-grandchild was born.
So he just puts his money in that kid's policy,
and they all transferred because the life insured is still alive. So the policy asset, the ownership transferred to the next generation without a taxable event.
That's cool. That is cool.
All the tax-free death benefits were available for the remaining family members as they were distributed to be able to pay off outstanding policy loans on their own contracts. Not the ones that Nelson owned on them, the ones they owned on themselves. So they could access capital whenever they needed for an opportunity. Now, three of those policies of the 28 that are remaining were on ex-business partners in the real estate development business. When Nelson was alive, he had 2 death claims on former business partners. After their real estate joint ventures were over, he didn't see those guys socially, didn't really connect with them after that a whole heck of a lot. And, a couple of them passed away. And he would say, well, didn't that solve a lot of problem or, a lot of mistakes I made in life? Okay. So once you get into business in a real estate transaction, you automatically have a beneficial interest in that other person's body, that life. Because if they go, it's a buy-sell arrangement. It could harm your business scenario, especially if you're buying multifamilies, you're bringing in investment partners, or you're a general partner in like an offering memorandum or something, you want to raise capital. The more that you protect the money for the people investing with you, the more likely they're going to invest more dollars. So there's all kinds of hierarchical things we can do when our thinking is done the right way to maximize the utilization of the asset. The asset's not limited to real estate. You want to know what I think the best asset is on the planet? Human life. Human life is our best asset. And did you know you can insure it and build a cash pool that'll allow you to go and do all the other things in life you're doing anyway? You need to go buy a car. You need to go on vacation. You need to put your kids through school. You need to go, buy real estate. You need down payments. You got to have money in escrow. You got to pay your property taxes, and on and on and on. Well, all that money has to come from a reservoir. Well, right now the reservoir is your regular checking account at someone else's bank. Well, if we change the location and the warehouse from someone else's bank to an insurance company that you co-own in a banking system that you manage and maintain, and the insurance company you co-own has only one job, guarantee the benefit, and then support a long-term share of profits to you as an owner, and you can access capital from them on demand with no questions asked in an unstructured loan. I'm going to say that again, in an unstructured loan. Now, Charles, you've been doing multifamily for a long time. You know a lot of real estate investors. You got a lot of coaching clients. How many unstructured loans have you heard about out there in the real estate marketplace?
Yeah, none.
Unstructured meaning you control the repayment terms 100%. If you don't send a payment, hey, is some interest going to accrue? The answer is yes. But if you're just buying a building and then you're refurbing the building so you can raise rents, and it's going to take you 18 months to complete that project, and then you've got higher income, higher rent roll, can you now start making a repayment back to the policy loan? If you could control the repayment terms of every loan that you do for your real estate practice for the rest of time, how would that change the game for the average investor?
Yeah. Richard, very cool. How do we get a hold of you? What's the wealthwithoutbaystreet.com? I mean, you get that great podcast. But how else can we get a hold of you?
Well, a couple things I'd love to do. I'd love to offer a copy of one of our books for everybody for free, if that's cool for you. They can go to cashfollows.com. That's cashfollows.com. And they'll get a download of that bad boy right away, right to their inbox.
All right. What's the other book too?
We have Canadian's Guide to Wealth Building Without Risk. And we just launched one called Keep Taxes Away from Your Wealth, the 5 strategies to reducing taxes you owe now and into the future.
All right. Now that other one about the Canadian one. Because I came out with a new book called Cash Follows the Canadian Leader.
Ooh, I like that.
Yeah. You know, if you're going to make these distinctions and like you're in a special club, then I can do the same thing. You know,
the good news is our Canadian book is actually going to be re-released as an American book anyway, because there's actually not anything in it other than a couple, like 2 or 3 terms that are uniquely Canadian. You know, the difference is you guys have 401ks and we have an RSP, but fundamentally it's all the same. Yeah. So the content in the book really doesn't see a border.
Will I be able to pronounce some of the words exactly the way American way?
Yeah, I mean, you might have to over accentuate the O's and the U's a little bit as you go through it.
And who's. Yeah. So that's the thing is that I know all these terms. I can understand Canadian because I listen to a lot of Canadian podcasts, by the way. So you guys will learn. You guys will learn sooner or later. So
yeah, we don't mind bringing you around for the ride. You know, it's okay. We're patient.
Richard, great to see you. Great to meet you. I love the story. I love the explanation. That is awesome. Folks, check him out. Richard Canfield, Wealth Without Bay Street. It's like wealth without Wall Street, and we all know how that works. So great to see you. I'll talk to you soon, buddy.
Thanks so much. Appreciate it.
Take care.